Hello, Damon Udacek here, local CPA, where we reduce liabilities and increase tax returns. This is the second video in my financial statement series. The purpose of these videos is to help you understand your financial statements so you have a good understanding of what's going on with your company. This gives you black and white numbers, objective data about what your business is doing. And I found a lot of time once people actually read the financial statements and understand what they're saying, they're going to make different decisions about their business. So you can gather a lot of information about your business by understanding how to read the financial statements and then also reading them as well and then analyzing. So with that, I'm going to go to the balance sheet. The purpose of this video is really go into the balance sheet. All right, now the balance sheet is going to give us a financial snapshot of our business for a point in time. So if we're looking at our Dunder Mifflin Paper Company balance sheet, this is going to be a balance sheet for September 30th. So it's only going to be valid for September 30th. It's not going to be valid for September 29th, and it's not going to be valid for September or October 1st. It's only valid for September 30th. So that being said, it's different than the income statement, where the income statement covers a period of time. For instance, it could cover a year, it could cover a quarter, 6 months, or it could even cover a day. But the balance sheet is only valid for one point in time for September 30th. Okay, so let's go ahead and talk about the balance sheet. We've got two major sections. We've got our assets section, and then we've got our liabilities and equity section. Now, why do they call it a balance sheet? Because it balances. So let me talk with you, show you what we're talking about. If the balance sheet did not balance, they wouldn't call it a balance sheet. So one of the fundamentals of the accounting is the accounting equation. And the accounting equation says assets equal liabilities and equity. So right here we've got our assets of $39,976, and then we've got our liabilities and equity of $39,976. So as you look here, this number matches that number. They balance. So that's why we say that the balance sheet balances. If these two numbers did not balance, then we'd know something was wrong. All right. So let's go into the assets section of the balance sheet. We've got current assets, and those are liquid assets that you can use. You can use them right now. We've got our fixed assets. Now let's go back to the current assets section. Cash is very liquid. Another example of another current asset would be accounts receivable. So you should be receiving that. You should be able to convert that into cash pretty quickly. Then you're looking at fixed assets. So these are assets that are going to have a useful life of more than 1 year. A good example of that is a vehicle. A vehicle is going to have an asset life of 5 years. So the vehicle is bought for $20,000. And every year we're going to depreciate that vehicle, or depreciate or expense it for $4,000. 20 divided by 5 equals 4,000. So what we do then is we show accumulated depreciation. And so for this year, part of that $4,000 is already in here. And then that lets us know that the value on the books of our fixed assets is $21,000. Now the book value is not necessarily market value. It could be that this $20,000 vehicle is really valuable, and we could sell that for maybe $25,000. That's what we're talking. We're talking strictly book value based on what we bought the fixed assets for. The other asset section is for our intangibles. So let's say you bought a business, and part of that business was goodwill. Goodwill would be in this example. Software is another intangible. And instead of depreciating these assets, we amortize the assets. Essentially, it's the same function. We just call it a different name. And then we add all these things up, and we get our total assets of $39,976. Now let's move to the liabilities and equity section. And that's really got two sections. You got your liabilities section, which is going to be right here, and then your equity section. Now within the liability section, we're going to break this down between current liabilities and long-term liabilities. Now a current liability is going to be a liability that needs to be paid off in the next 12 months, whereas a long-term liability needs to be paid off in more than 12 months. Okay, so if we look here, something that we notice is we've got current portion of long-term debt. So, and then we've also got less current portion long-term debt. So what we did here is this loan's got, let's say it's got a 5-year repayment period. In order to make these this balance sheet as accurate as can be, we're going to move the payments, the principal payments that need to be paid over the next 12 months. We're going to subtract that from the long-term portion and move it up to current portion. Now this is important to know because for operations we need to know that over the next 12 months we've got principal payments on this loan that are going to equal $10,385. So our business needs to generate cash to pay off these short-term these principal payments. And then when we add the current portion with the long-term portion, we're going to come up with our total liabilities. The last section of the liabilities and equity section is the equity sections, and this is retained earnings. So basically, this is earnings that you've made from prior years that were never distributed to the shareholders. That's why we call it retained. Okay, and so basically, the retained earnings are available to be distributed to the shareholders, and that gives us our total equity. And then when we add our total liabilities to our total equity, that's going to equal the total liabilities and equity section. And again, that section, the total liabilities and equity, equal the total assets. And therefore, our balance sheet balances, and we've got a good balance sheet. This concludes the video. Hope you have it. Please find us on at our website, unticheckcpa.com, or find us on Facebook. Have a great day.